Good morning, traders. It's 8:01 a.m. on Wednesday, the 28th of September 2016. This is another Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. A lot of commentary overnight on the crude oil situation, the meeting in Algiers, and the politics that are involved with that. But also, one of the key drivers for Europe is the issue with Deutsche Bank. There's a rumor out there that the German federal government may assist that bank, although they're denying it. And we all know that often these denials are just a way of buying time before that actually comes true. Uh, the the key thing to watch out for today, as I said before, we're changing the format a little bit, so I'm not covering news. It's not a good use of the time that we have here together. We want to compress these trader bites to about 10 minutes. But I am going to look at what's important for the day. And today is likely to be driven by Fed speakers. We have a ton of them. Central bank speakers, we have a ton of them showing up one after the one after one in line. Starting with 8:30 Central, 9:30 Eastern. ECB Speaker Draghi is releasing comments before the German Parliament, and then we get Fed Speaker Yellen, uh, who's testifying in front of the House panel on bank supervision at 9 Central. It's a half hour after the open, 10 Eastern, followed by Fed Speaker Bullard. Once that's done, IMF's Lagarde speaks at 9:30 Central, 10:30 Eastern, then ECB Speaker Draghi again at 10 Central, 11 Eastern, then 10:30 Central, 11:30 Eastern. We get ECB Speaker Villeroy. Once that's done, we move over to Fed Speaker Evans at 1:30 Eastern, 12:30 Central, followed by ECB Speaker Jazbek at 2 Eastern, 1 Central, and then we finish up with Fed Speaker Mester at 3:35 Central, 4:35 Eastern. That's a big parade. And Kashkari is releasing comments currently. Fed's Kashkari is a non-voter who just said that the U.S. economy still has room to run before it overheats. The U.S. job market's continuing to create jobs at a healthy clip, does not see signs of a housing bubble reforming. The Fed has traditionally been slow to respond to bubbles anyway, so take that with a grain of salt. But my point is today is driven by news, is likely to be driven by news, and you need to be cautious. Hopefully, you have some a news feed or some way to keep up with what's going on, so that you're aware of the reactions in the market. And of course, a lot of these speakers will speak out of schedule as they're confronted by journalists and reporters and so on. So that's where we are for today. As far as what we're looking for, as far as what we looked for yesterday, where is it? Here it is. Here is the key expectation for yesterday. We're looking for the primary idea yesterday is a responsive buying into the prior day's range to test 39.50, finding sellers in those areas for a continuation lower, and then the key level to test would have been 21.2775, which is the weekly low that ends the weekly one-time framing up or the weekly trend, and we would expect to see some follow through. This is still, even though we are back down here, this is still part of the process that I spoke about last, I don't remember if it was Thursday or Friday, of the market pushing into the upper balance in the 60s, 60s and 7, 2160, 2170, pulling back, although this pullback's been deeper than I expected. But I'm still on the same, I don't see that hypothesis being breached yet. Hypo 1 did not play out yesterday. Instead, we actually got Hypo 2, which pushed a lot farther than I expected. Hypo 2 is expected to push lower uh, early to come in lower, but the overall idea behind Hypo 2 is a trend up, is a push up, and I could not predict the range to be as wide as it was yesterday since we pushed almost to 2154. The expectation is that we would push back into um, Monday's range, and then hold in there, and then wait the next day for the gap zone above to be taken. The gap zone is 2149.50 to 2156. Here's what actually happened. Here we go. This is what actually happened. On the open, we had a very strong drive lower, or I should say a relatively strong drive lower. So we know that there's a higher time frame acting on the sell side. So the opening type has to either fit an open drive, an open test drive, or an open rejection reverse. Once the market tested below, Once the market tested below and put in a higher low, it became an open rejection reverse. There was no continuation on an open drive. We would not have on an open drive to the sell side, especially initiative, um, meaning it's pushing down uh, directly and without any pushback. We would not get an opening swing low, but we can see that buyers responded at 32.75, and 32.75 is, of course, the MC point of control that is below us, the newly formed MC point of control at 32.50. We missed it by a tick. That was our initial idea, or the initial area that we expected to test. There it is. Here it is, this 32.50. That's where we expected the reaction. Okay, Mike is clicking. Okay. Um, yeah. So back to where we ended up yesterday. Immediately after the test at 32.50, uh, we pushed right back into the prior day's range. Here's the prior day's range. The next area to test was this 44 area, the value high, and the market just pushed right through it. We had a very um, a very tradable consolidation push type of configuration. The key trade of the day was the pullback to the mid against yesterday's point of control and close. It had this zipper as a backup area. It pushed through a little farther than I expected, but that's the only opportunity I saw that I could jump on and catch a move higher. The trouble is, unfortunately, because of the way the VIX has dropped and so on, I just didn't see the range expanding as much as it did. And what we ended up with yesterday is a fairly wide IB initial balance, broken to the top side with a point of control that shifted up all day. You can see it's increasing in size. So there's more and more reaction. There are more and more participants on the sell side as prices went up, right? Which we would expect as prices go higher. There's more and more participation on the sell side, and we can see how these high volume nodes just increase as price pushes higher. But we ended up shifting the point of control to the high. We have a weak high against the gap zone, and the way things closed up, finished up, as I talked about in the S5 chat room, the expectation is for the overnight high to continue higher. Okay, and that's what happened. This is very typical with a point of control that is right at the high of the day. It's essentially saying the um, the auction is being cut off by something other than price discovery. And auctions operate on price discovery and volume only, right? Those are the key drivers. What's the price, and how much of it can we clear? How much can we trade on? Currently, the market's trading 21.55. It's been lingering pretty much a good chunk of this morning in the upper high volume node up here, and it's breaking higher now. We'll look at the overnight here in a second. Here we go. The overnight's definitely very interesting. The market reopened and started to glide down, and then we got our test higher later in session on the European markets. Again, there was a rumor that Deutsche Bank, which is in a lot of trouble, actually has a $14 billion um, penalty that it's negotiating. I think with the U.S. Department of Justice. I don't remember what the article said. But that's a big component of the DAX, and you've probably noticed over the last couple of days that the DAX has been all over the place, with the DAX being strong today, up 1.31%, 135 points, trading at 10,469 currently. And so what we had is a quick rally. The market discounted that news as it was denied. And then it's drifted up. We have a Gaussian profile, but the value area shifted to the low side. And we have volume that is perfectly in line with what is most common volume for the overnight session, a fairly active overnight session, and the market is pushing to the upside. As long as we continue to hold yesterday's LVN at the 48.50 area, the expectation for me is that we would continue through the gap zone above and continue to drive towards what we talked about last Friday. Let's take a bigger picture look here at what that is. What is the objective here? As discussed here last Friday, and yesterday actually, we've spent a fair amount of time this summer in this area. We like these prices in the 2116 above, and then we dropped on the 9th of September. We dropped, and then the next Monday, the 12th, we pushed higher, took most of that back, traded in balance here, and then last week we pushed out of the lower balance and back into the upper balance. And the idea was that this is likely to step back, to pull back, consolidate, continue higher, take the 74, 75 point of control from above, and then reach for higher prices. I'm nursing a sore throat, so I'm having to stop and take a sip every once in a while. You have to bear with me. This morning, what are we expecting this morning? You can probably hear my voice cracking here and there. What are we expecting this morning? This morning, we're trading at 54.75. I expect this VPOC to be a magnet this morning. Um, the VPOC to be a magnet this morning. The expectation is for the market to drop into the 52 test around. As long as we hold this 48.50, as I spoken about just a minute ago. Let me enlarge this a little bit so it's a little easier to see. There we go. As long as we hold above 48.50 this morning on a retest, we're likely to test lower and then start finding buyers. Our first target will be the overnight high, which is also the composite low volume node. And then the expectation is for a pullback and then to start pushing towards the 65 and eventually the 74 above. And that's Hypo 1. So Hypo 1 is looking for responsive selling. I expect yesterday's point of control to be a pretty strong magnet. I'm looking for to rotate down, test through the point of control. There's some confluence here in this 48.50 area. I'm looking for that to be a base, and then once the base is reached, I'm looking for rotation higher, and the target becomes the 58.50, and then we start to push into the range from last Friday again and taking that back. Okay, so that's the primary hypothesis. The secondary hypothesis is that we have initiative push through this gap zone into the prior day's range, run into the 58.50, and then start to rotate down back into yesterday's range. and then retest some of this trend day from yesterday. Again, if it pushes back in, I'm keeping an eye on the 48.50 area. That's the key price that the buyers will want to defend to keep the market auctioning higher and for them to profit. So that's how things are shaping up. I apologize about the audio issues here, folks. There's just between my throat and this microphone, I don't know what the deal is here. Um, you know, it wasn't as smooth, but you should get the point. You should have gotten the point anyway. Look for me on Twitter to retweet um, the images of the hypos so you have them and you can compare them to what your expectations are. They're being generously posted by a volunteer named Mike. And I just retweet them, and I think that those are pretty useful to look at as opposed to trying to find that in the video. Good luck. Take care.